On Wall Street, trillions quietly move through the American repo market.
Every night, institutions exchange cash for U.S. Treasury securities. This hidden system finances enormous positions in government bonds.
Without repo funding, the Treasury market could struggle to function.
And when stress appears, the Federal Reserve often intervenes.
A repo transaction is essentially a short-term loan secured by bonds.
A dealer sells a Treasury bond and promises to buy it back. The price difference between those trades becomes the interest.
Most repo transactions last only a single night.
Yet the scale of this market reaches several $1 trillion.
Primary dealers rely heavily on repo to finance their bond inventories.
These dealers often hold massive quantities of government bonds.
Repo allows those securities to transform quickly into cash. Like plumbing, it moves liquidity beneath visible markets. Banks, dealers, and funds participate in this overnight funding network.
Some institutions lend cash, while others urgently need funding.
U.S. Treasuries provide trusted collateral for these transactions.
They remain among the safest financial assets in the world.
That safety allows enormous volumes of overnight lending. Every trading day depends on this invisible liquidity engine. Dealers constantly borrow cash to support Treasury market making.
This funding keeps the Treasury market highly liquid.
And that liquidity supports stability across global finance.
But even this system can face sudden stress.
Liquidity shortages can suddenly disrupt overnight funding markets.
When funding becomes scarce, repo rates can surge dramatically.
Dealer balance sheet limits can restrict available lending.
Large Treasury issuance can increase demand for repo financing.
When pressure builds, funding markets react almost instantly. Sometimes repo markets reveal stress before broader financial turmoil.
Analysts closely watch repo rates as early warning indicators.
A disruption here can ripple across multiple financial markets.
The repo system connects banks, dealers, and major investment funds. This network moves enormous volumes of capital every day. Each night, collateral moves between institutions across the repo market.
Clearing banks help process and secure these transactions.
Automation allows the system to operate continuously overnight.
Yet the entire structure still depends on trust and liquidity.
When confidence weakens, repo markets tighten rapidly.
When confidence drops, repo funding can tighten very quickly.
Funding shortages can spread rapidly across financial networks.
Central banks monitor these signals extremely closely. The Federal Reserve can inject liquidity through repo operations.
These operations stabilize short-term funding markets.
Liquidity injections help restore confidence in overnight lending.
Gradually, funding markets return to normal trading conditions.
The Treasury market continues operating with stable liquidity.
Yet the underlying system remains largely invisible.
Most investors rarely hear about repo markets. But financial professionals rely on repo markets every day.
Without repo liquidity, bond trading could slow dramatically.
This system supports continuous trading in U.S. Treasuries. Like plumbing, repo quietly moves liquidity beneath the surface.
This quiet market powers the core of American finance.
Every night, billions move quietly through repo transactions.
These transactions allow institutions to access short-term liquidity.
Reliable funding supports stability across the bond market.
Behind bond trades lies an enormous funding network.
And repo can be done further. And repo stands at the center of that system. This funding system operates quietly beneath financial headlines. Liquidity flows nightly between major financial institutions.
U.S. Treasuries anchor the structure of repo lending.
This network connects banks, dealers, and investment funds.
Together, they move enormous capital across the financial system.
Professional traders understand how crucial repo liquidity really is.
This system connects banks, dealers, and major investment funds.
It acts like plumbing, moving liquidity through the system.
Stable funding helps maintain orderly government bond markets.
For Wall Street, repo remains an essential financial engine. It quietly connects institutions across the American financial system. Behind market headlines, enormous capital moves overnight.
Few investors ever see this hidden infrastructure.
Human energy powering the core of modern American finance, all underpinned by repo. In modern finance, liquidity often begins in the repo market.